G'day everyone. Last week I produced a video on covered calls. I got a lot of feedback, certainly plenty of interest, but also some confusion and some skepticism about the numbers that I put up. So I thought the best thing to do was to take you through a multi-month exercise of actually initiating and tracking the progress of trades with covered calls. And I think that'll give you a much better idea. So I'll be using real numbers in real time, and I think that that's the best way to give you the concept. Now, if you've never traded options, then please don't do this on your own because there's a lot you need to understand. If you do trade options, then this may or may not be at all suitable for you, depending on your game plan. So let's jump in and have a look at two of the world's largest stocks. The first one is Apple. Doesn't need any introduction. Has a market capitalization of about $760 billion as at the moment. And I'll just pan back and give you a sense of what the share price of Apple has been doing. So if we go back to 2011, it was trading at about $50, went up to 100 and back to 60, and then it went to 130, back to 90, and then it's advanced to around the 140, 150 mark at the moment. So you can see it's a stock that's in a very, very strong long-term uptrend, and periodically it has retracements of anywhere from 40 to 60%. Now let's move forward to today. Ideally, I would like to be initiating this with the price of Apple a bit lower, down around $130, $135. But look, it doesn't really matter. And that's the whole point about covered calls, is that they provide you with a lower risk way of owning the stock, and they provide you with a lot more flexibility than just owning the stock. So whilst this isn't the most ideal time to be initiating on Apple, it's not that bad. So let's use this as a starting point, and over time it'll even itself out. So as of tonight, I'm looking at buying 100 shares of Apple at $146, which represents an outlay of $14,600. Now the reason I'm choosing 100 shares is because each options contract represents 100 shares. So to initiate this transaction, we are going to do what's called sell to open. 1 July $146 call. So that's a call that will expire in 25 days. And we're going to receive $2.95 per share, or $295 per option contract. So that's times 100 shares. And of course, that expires in 25 days. Now, if you want to look at the yield return on that, then it's $2.95 divided by 146, and of course, multiply it as a percentage, gives you 2.02% for 30 days, which is a very useful return indeed, particularly in owning one of the world's biggest stocks. Now, this is not a trade that personally I would do, because I actually use a higher hurdle for initiating covered calls. I actually want to get a better return than 2% a month. But a lot of people would be very happy with, with 2% premium for a 1 month period. So there's the entry there. And we'll revisit this in about 3 or 4 weeks and see how it's progressing. Now, the other one that I'm going to do is JP Morgan, which is one of the world's biggest banks, has a market capitalization of $308 billion, so it's one of the top 10 US listed stocks, trading at $86.86 at the time of recording this video. So that's an outlay for 100 shares of $8,686. So we're going to sell to open a July $86.50 call. So we're going to give someone the right to buy our shares at $86.50. and they are going to pay us a premium of $1.67. Multiply that by 100 and we get an income of $167, which goes into your account. And of course that expires in 25 days. And if we work that out as a yield, it comes to 1.92%. So quite similar to Apple. If we just pan back and look at the trend in JP Morgan, you can see that there's been a very strong long-term uptrend, which really started in after the GFC. The stock was trading down around $20, and now it's around the $85, $86 mark, and there's the entry point mark there. So that's the process that I'm going to go through. So I'll produce an update on these videos about once every 3 to 4 weeks. If you missed the first video on covered calls, then there is a link in the description below. So let's get cracking on that, and I'll be back with you shortly. Cheers.